Good evening and welcome back to the program. This is Business Tuesday and my name is Eddy, Nyadwa. Joining me now is Stephanie Onchwati, an investment analyst from Cytonn Investment. Stephanie, welcome to the program.
Thank you, Eddy.
Now, over the last few years, Kenya's public debt has been a point of discussion for numerous organizations. The IMF has talked about it, African Development Bank has talked about it, and also a number of global rating agencies. For Cytonn, do you think the Kenya public debt is worth any discussions?
Yes, for Cytonn, we've actually looked at the situation and we think it warrants a discussion. We've actually talked about it 3 times over and we wrote a focus about it just the other day. So for us, we came to a conclusion that the situation with the public debt actually warrants some concern in terms of whether our debt is sustainable. So we have actually suggested ways in which the government can ensure that the public debt is sustainable going forward.
Okay. Now, 5 years ago, the public debt to GDP was estimated at 44%. That is 5 years ago, 44%. Now, in December 2017, it was estimated to be 56.2%. However, the globally accepted debt levels as per the IMF for frontier microeconomies like Kenya should be about 50%. Ours has already surpassed the 50% mark by 6.2%. Now, should this worry us?
6.2%, some would argue it's not such a big percentage, but we are heading towards a point where debt has surpassed the threshold. That's IMF threshold is 50%. We also have the EAC protocol, which also stipulates 50%. So these are already two bodies that are saying that we are above their thresholds. So we feel that the government should look at this as a point where we are heading towards a situation that debt might not be manageable. Already bodies like Moody's are projecting that debt to GDP ratio will have surpassed 60% by June 2018. And this is mainly due to the borrowing of the Eurobond that's scheduled in March. So 6.2% might not look so big right now, but it should be a point of concern.
Now, should our debt to GDP ratio surpass the 60, reach the 60% mark by June? Is that a debt crisis now in the country?
No, a debt crisis would occur whereby the country is unable to actually pay any loan obligations that have fallen due. So it wouldn't be a debt crisis should we surpass the 60% by June 2018, but it would still raise more concern than we actually are in this situation right now at 56.2%.
Now, despite all these concerns, the National Treasury has, however, been refuting some of these ratings, saying that the analysis was not done, or rather, the analysis was not well informed. What do you say about this? Is this mischief from the Treasury or what?
I would not term it as mischief from the Treasury, but if you read through Moody's rating and Moody's recommendation in terms of their concern about our debt, it's actually something to look at because they raise concerns about liquidity, that the government might not be able to meet the large liquidity obligations that are arising soon. Like for example, the Eurobond that was issued in June 2014 the 5-year bond is going to mature next year in June. So that's a big obligation that we might have to meet, coupled with the bond obligations that we're supposed to meet as they mature this year. So their concerns are warranted, and I would not say they are not well researched.
Okay. Now, at this point, I want to throw in some numbers about the major lenders to Kenya. And leading the pack is China. China has so far lent us 520 billion shillings. Surprisingly, the second biggest lender is Japan, and the gap here is what surprises me. Japan has only lent Kenya 82 billion, while China 520 billion. Now, this is more than 400 billion gap. As a country, is it advisable, is it safe to lend such a huge sums of money from one country while the others are lagging way behind?
Okay, in terms of a country that's lending, a single country lending to another single country, I wouldn't say it's that much of a risk. Of course, diversification is important, but the more important diversification when it comes to public debt is the currency in which this debt is issued. So the more diversified we are in terms of what currency we get our debt in, the better for us. Because should anything happen between the exchange rate between our currency and other currencies, then at least we'll be well diversified to be able to withstand the shocks that may arise.
Now, we have both concessional and non-concessional loans. Which is the better evil?
For concessional loans are definitely better because they're issued at better terms. We get a better rate for it. Non-concessional loans, on the other hand, seem to be more expensive because country risk premium and all the other risks that are associated are usually piled on top of it. So we get it at a very high rate as compared to concessional loans. So if you ask me, concessional loans are much better. If we could have a higher weighting in terms of concessional loans as opposed to non-concessional, it would be a better thing because our debt service then would be cheaper.
Now, lastly, as we come to a close, this debt crisis, or rather the issue about public debt, what does it mean for Wanjiku, the common Mwananchi, in terms of taxes? Will we be taxed more so that we can able to afford enough money to pay these loans?
Okay, so for the common Mwananchi, the common taxpayer like both of us, it would mean that either the government would have to increase the amount of tax that they charge us. That's one way of doing it, but we've already seen them do it. And in the budget last year, they actually tried to reduce this just to incentivize, just to make tax less for the common Mwananchi so that they can be able to afford the goods and basic goods that they need. But now, what the government would now end up having to do, they would have to widen the tax base, and this would mainly be through targeting the informal sector, which is basically the larger part of the economy. So that's what I would see the government doing. I would not see them increasing tax because that would just mean they would fall out of favor and they would be contradicting what they already promised in the previous budget and in whatever speeches they've been giving. So I don't see us being taxed more, I just see them trying to widen the tax base.
Okay. Thank you. Now, lastly, I want to end some good news. We've seen that a number of global rating agencies have been giving Kenya like a thumbs up in terms of economic growth, placing between 5.2% to 5.6%, with Central Bank giving itself 5.6%. Now, where do you see the economic growth reaching?
For Cytonn in 2018, we actually project economic growth of 5.4%. We think this will be driven by growth in manufacturing sector. We've seen a lot of reforms towards this sector just to spark growth in manufacturing. We also feel the agricultural sector will recover. Last year there was a drought, so this year there is no drought. We expect the agricultural sector to recover, this being the largest sector in the economy. And then we also see recovery in the tourism sector as well, so this will also spark growth, and construction as well, and real estate. We also see growth in these sectors. So with these sectors boosting growth, then we see growth at 5.4% in 2018. This is from 4.7, an estimate of 4.7% in 2017.
Okay. Thank you very much. Now that has been Stephanie Onchwati, an investment analyst from Cytonn Investment. Business Tuesday takes a short break. We'll be right back.